Welcome, everyone. Thank you for joining us for the webcast, Global Hiring Without the Headaches, Staying Compliant While Reducing Costs in 2026, sponsored by RemotePeople. This webcast has been pre-approved for HRCI and SHRM credits. Please be sure to attend the complete webcast in order to receive your credits. You will receive an email from hr.com within 2 business days. It will include the certification credit information. You may also log into your account and view the credits that you have received. If you have any questions during the webcast, please click on Q&A in your webinar controls and type them in. And now it's my pleasure to turn it over to Chris Kafina to get us started.
Thank you, Kathy. Hey, everyone. Thanks for being here. I'm Chris Kafina. I lead sales at RemotePeople. So we've got about 60 minutes today, and the goal is to provide everyone here a global hiring playbook you can take back to your team. I promise this won't be a product pitch. Yes, I'm a sales guy, but I'll refrain from pitching RemotePeople. Anyways, we'll get into hiring globally, how to pick the right employment model, what compliance risks are actually affecting people in 2026, and how to think about reducing costs without creating liability. So if you were thinking you were stuck with me, good news, there's actually two of us. Mark Fielding, you can see on the right, is our Director of Strategic Partnerships at RemotePeople. He lives in the compliance and legal risk world, has a very good understanding of employment law across different jurisdictions, what actually gets companies into trouble internationally, and how to avoid it. So he'll handle everything compliance related, and then I'll come at this from a strategy and commercial perspective. How do you structure global hiring so it actually makes sense financially? So we, again, deliberately split it that way because the two things don't always get talked about together, but really, in reality, they should. And I know Kathy already touched on a lot of this, but I'll say it again. A few quick items before we dive into the nuts and bolts. I know many of you are here for the credit, so just keep in mind that you'll need to stay for the full session. There's a code and instructions that will come at the end. Regarding questions, just throw them in the chat as they come up, or save them until the end. We'll cover any questions in the last 10 minutes. We also have 4 polls. Please participate. It makes the conversation better, and it really helps Mark and I structure, tailor fit how we talk through everything as we're going through it. And also, no need to take notes. We're going to send after this via email a 2026 compliance checklist and a country guide. So you'll receive all of this information after the webinar. And again, no need to take notes. I promise there's not a test, or at least I I don't think there is. I'm not sure I'm certified. So yeah, but those are the housekeeping items, and now we can dive into it. As for an agenda, really 4 main points here. We'll start with a bit of context, and I think this is nice just to understand the history of how global hiring has evolved over the last 30 plus years. Then we'll get into 3 employment models and how to decide between them, which makes the most sense for you and your organization. Mark's going to handle the compliance section, as I mentioned earlier, and he'll lay out 4 risks we're seeing cause real problems nowadays. And then we'll close with a cost framework, because contrary to popular belief, reducing costs and staying compliant aren't always inversely correlated, but as long as you structure it right. So I think that's important to really pay attention. To understand why this is even a conversation right now, it helps to know how we got here. So in the 1990s, hiring someone in another country was a whole thing. It meant building there, setting up a subsidiary, which could take anywhere from 3 to 12 months, depending on the country. And as you can imagine, that would be quite expensive and burn a hole in your pocket. Basically, only enterprise Fortune 500 companies did it. In the early 2000s, the EOR model starts to appear in the US more and more. right? Like broadband comes along, remote work becomes more viable, and you start to see a gap. Freelance platforms exist, but nobody's really considering or handling the compliance side with the right perspective, and they're not handling it properly like they should. Then in 2010 to 2019, so 10 years ago, we start to see signs of real growth. EOR providers come into the market. You can hire compliantly in 50 plus countries without an entity, but it's still mostly VC-backed tech startups that are taking this approach. Important to note, pre 2020, the market's a $3 to $4 billion industry with about 12% penetration, which is solid, but it's still fairly niche at that point. And then, as you can expect with what happened 5 years ago, everything changed. As you all know, the 2020 pandemic changed the global economy. It initiated real scale from a remote work standpoint. Everything became virtual basically overnight. So 16%, as you can see here, of the global workforce goes remote overnight or within a few weeks. EOR signups go up over 300% year over year. Companies that never would have considered international hiring are doing it because they have to. And the reasons for that, companies can hire more cost-effective talent. They can access a larger talent pool if they're looking internationally outside of the country where they're based. Having a global workforce, they can improve efficiency with people working in different time zones. And they can also access new markets because they have boots on the ground in various countries offshore. Stanford and McKinsey both confirmed remote output is the same or higher. So over the last 5+ years, the hire anywhere idea stops being an enterprise VC-backed startup thing and becomes a board level conversation. By 2023 and 2024, the market matures. It hits 6 to 8 billion. LATAM, Eastern Europe, Southeast Asia become the main talent hubs from, mainly due to cost. And the cost advantage versus equivalent US roles is 50 to 70% in savings, which is meaningful and significant. And on that note, with the cost savings, a quick story, and I promise this isn't me really pitching, but something that happened in my own network. I was out with my best friend. He's a COO for a company called Graphique. They're based in the Boston area. That's where I'm from. And he mentioned to me a few months ago that he wants to hire an analyst. But the only thing stopping him was cost. So I, of course, maybe I was pitching him at the time, but I mentioned hiring in the Philippines. That's a very popular country, and great talent there. And a month later, he ended up hiring someone for 25K, whereas in the US, he was looking at a minimum of 80K. So you can see really, the cost advantage versus equivalent US hiring is significant. Anyways, now in 2025 and 2026, AI has cut EOR onboardings to under 48 hours. Like a lot of it is automated, and the market is tracking toward 20 billion by 2028. So, 10, 15 years ago, 3 to 4 billion. Now we're encroaching upon 20 billion in just a few years. So clearly we could see hiring internationally is not just an HR ops topic, but it's also a huge profitability lever. And the data confirms it's not slowing down. 76% of HR leaders say accessing global talent is a strategic priority this year, not just a nice to have. The global remote work economy is projected to hit 15.6 trillion by 2030. Pretty wild stat right there. Cross-border hiring by mid-market companies grew 47% year over year. 1 in 4 US employers now hire across at least 3 countries. So if you're on this call, you're either already doing it or likely going to be doing it in the future, because this is just a trend that's up and to the right. So the question is how to do it without creating a compliance mess or overpaying to make it happen. So that's really what like the focus of today's call is on. And Mark will really touch on the compliance piece, which is often missed or overlooked because it's not always the sexiest conversation, but it's super important. Which leads us to our first poll. Get a little drum roll. No, okay. One sec. And then Kathy's going to initiate the poll so everyone can participate. How many countries does your organization currently employ people in? We'll wait 30 or so seconds, and then we'll see the results. Okay, so 44% just our home country, 2 to 5 countries, 22%, 6 to 15 countries, 11%, and 16 plus countries, 22%. I really like to see the 16 plus countries at 22%. That was more than I was expecting, but that goes with the dialogue that I'm sharing, that this is becoming more and more relevant for companies globally. And it's pretty consistent otherwise with what we see. Most teams land in the 2 to 5 range, though it's, again, skewing higher and higher every year. If you're in the just home country bucket, this conversation is even better. There's more value to kind of learn, what to consider when hiring internationally and things that you can bring back to you and your team. If you're already in the 16 plus bucket, you'll especially want to lean into the compliance section with Mark. And that leads me into my next slide, which is how does international hiring work logistically? I'm sure many of you already know this, but I will get into it nonetheless. There are really 3 ways to hire internationally, and each one has its own use case, of course. So number 1 is employer of record. In this case, a third party like RemotePeople is the legal employer on paper, while you, the client, manage the day-to-day work of the employee or the talent. You can hire in days. You don't need an entity. Setting up an entity can take months. It can be quite expensive, and it can be quite the headache. And what their payroll and compliance are handled directly by the third party. The trade-off here is that there's a per employee per month fee. And it's generally the right move when you're under a 20-person per country threshold. To explain it in a bit more detail, and this might be me being a broken record, but I think it makes sense to just give an example, and I'll use my friend that just hired in the Philippines and his company, Graphique. So they hired in the Philippines an analyst. An EOR provider like RemotePeople signs an employment contract with that analyst. And then through our service agreement between Graphique and RemotePeople, we reassign the services of that employee back to the end client, which again is in this case is Graphique. So some people call it employee leasing, or it's just a reassignment of services. So the end client is still in control of the day-to-day operations, while the third party manages the payroll, the tax remittances, compliance, benefits, onboarding, offboarding, in order to stay compliant with local statutory requirements and local labor law. The second is setting up a legal entity. At scale, this gives you the lowest per head cost and full control over how you operate. The downside is that it takes a while, like I said before, and somewhere between 20K and 80K to set up. So it's quite expensive. The other thing to keep in mind is that when you exit that market, like if you were to remove that entity, unwinding is often slow and expensive as well. There's also the matter of staying up to date with statutory employment laws and regulations, which can be something that is an extra workload for you and your team. The third one, independent contractors, it's super fast, it's flexible. There's really no fixed cost, and it's easy from a flexibility standpoint. Like it's easy to bring someone on. It's onboarding is faster, offboarding is faster, so it works well for when there's like genuine project work. And what do I mean by project work? Is the relationship with that individual is not exclusive. It's not long term. It's not very supervised. There's no benefits or work equipment. There's not like an indefinite contract. And in long term, I mean like more than 3 to 6 months. Most major markets will treat employment or the individual as an employee if there's, it's a set schedule, 9 to 5, Monday through Friday. They're with you for more than 3 to 6 months. They're getting benefits, a laptop, they're getting allowances or, meal allowance or other perks as part of working for you. And they're only working for you. So it's exclusive. They're not working for like another employer. In this case, the contractor agreement is signed directly with the individual. So a company or a third party like RemotePeople is just acting like an HRIS and a payment processing tool for the client and the contractor. So client pays us, we pay contractor, but on paper, the client is in a direct relationship with that individual. With EOR, like I was explaining before, the third party is sitting in the middle, so that mitigates risk. So the one thing to consider when hiring a contractor is that there's contractor misclassification penalties if they're actually working like more like a full-time employee. That's something to consider. Another subset, which not everyone really knows about, is a contractor of record. Some call it agent of record, and this is a blend between employer of record and a direct contractor relationship, where the service provider, in this case, let's take RemotePeople, acts as the employer of that contractor. So there's really just a degree of separation and risk mitigation for the client. So a lot of companies actually prefer this over independent contractors. It's a bit more expensive, but less expensive than EOR and still offers the same amount of flexibility. But keep in mind, like a service provider usually does a certain amount of due diligence before they take on a contractor of record case, because we have to protect ourselves from contractor misclassification or reclassification. If that person or individual is actually operating more like a full-time employee, then oftentimes we will refuse that case or that opportunity. And no model is universally right. It just depends on the country, the role, and how long you're planning to be there. So where's the framework come in? And that's on the next slide. So this is a framework that helps evaluate a new international hire and which approach you should take. So first, consider how many people. If it's under 5, use an EOR. 5 to 20, start with EOR and then move towards an entity. And then over 20, an entity probably makes the most financial sense. Although there are cases where if it's over 20, a lot of companies still use an EOR because they're outsourcing all of the admin work. So it's less of a burden on them. And then second, how long are you there? And what do you actually need to do? Short term or piloting that region, use an EOR. more than a 3-year commitment, start looking at an entity, like you're really setting up shop there and see a future for growth. Maybe it makes sense to set up an entity and plan for the future. And if you need to hold assets or open a bank account or sign contracts locally, you more than likely need an entity from a compliance perspective. Third, what's the role? Like the employee style work, which I was touching on before when talking about contractors. Like, are there set hours? Is it supervised? Is it long-term, indefinite employment relationship? And that needs an EOR setup or an entity. Genuine independent project work, short term, less than 3 to 6 months. I already said that. The contractor is probably the right call again there. Just doubling down on that point. And also worthy of consideration is if they're working for multiple employers, not receiving benefits, etc. And then fourth, how risky is the market? This is an important one. Like Germany, France, Brazil, Mexico are highly complex and strict jurisdictions. If there's any ambiguity on classification, don't use contractors, default to EOR or entity. Those are risk adverse. The rule we use with clients, stick with EOR until volume justifies an entity. The break even in most countries sits between 15 and 25 employees. Below that, EOR wins on cost, speed, and risk almost every time. Contractors, again, while the most cost effective, aren't a strategy for ongoing work. They're a tool for genuine project-based work, milestones or short term. And that distinction matters a lot today. And that leads me to the second slide. I won't ask for a drum roll. And Kathy, if you could initiate that. Perfect. Which employment model does your organization primarily use for international hires? And I know there's some that are just based locally and just have nearshore workforce. So feel free to share like what you would do or most consider. Or I guess there's the last one is we haven't hired internationally yet, so choose that too. All right, let's see. Okay, so 19%, they have their own entities, 6% employer of record, 13% independent contractors, 25% a mix, and 38% we haven't hired internationally yet. Okay, that is similar to what we were seeing in the first poll. Makes sense why we're getting these percentages, and that's exactly where we're going next. Is which model makes the most sense for your organization from a compliance standpoint, which is why I have the pleasure of now handing it over to Mark.
Thank you very much, Chris. Can move over one slide. Perfect. So as Chris mentioned, I live in the painful detail of global employment policy and compliance, working with some of our kind of most diligent strategic partners when it comes to compliance, namely law firms, tax accountants, private equity funds, etc. I promise to make this as approachable as possible, or as Chris said, as sexy as possible to the extent that that is even an option. Starting with a double click on EOR, because EOR is, as Chris mentioned in his kind of potted history of our industry, relatively new, a relatively nascent industry. What that means, in effect, is that EOR is not yet directly regulated in most markets, meaning that we fall either under general employment law, so we are treated as any other employer would be in that country. That is our preference. Our model is designed to kind of honor all of the rights and protections due to employees under the local jurisdiction. But by default, sometimes we are classified by regulators under another existing staffing or labor leasing regulatory construct. And that does mean that in some instances, the EOR use case is kind of limited in its scope. So we thought it was really important to kind of address this head on to make sure that you understand better when and where EOR might be a good fit. Two examples of countries where that higher complexity exists due to our being regulated under existing staffing regulations are in France, where there is the portage salarial licensure, or in Germany, for example, where we fall under the Arbeitnehmerüberlassungsgesetz. I really try in every presentation or call that I have to pronounce that massive German beautiful compound noun because it is a joy to behold. But effectively, what that means in the case of Germany, for example, is that EOR can only be deployed for a period of 18 months for any individual employee. And again, the regulator's intention here is not to limit EOR specifically, but rather to kind of protect employees, citizens in Germany against what are perceived as predatory practices of kind of some of the staffing industry out there, players out there, around, for example, not ever conferring open-ended employment rights and protections to employees by, for example, offering back-to-back staffing, short-term kind of staffing gigs rather than full-time employment. So whilst these regulations aren't intended to regulate the EOR industry, they do in some cases, depending on interpretation of the regulators. Let's go into kind of three of the limitations of EOR then. One has nothing to do with kind of the regulatory context, but is around kind of permanent establishment. And Chris mentioned that one of the reasons you might consider setting up your own entity rather than other kind of ops light options for retaining talent is that you need to undertake substantive business activities. And that is where this term tax nexus or permanent establishment comes into play. So these terms mean the point at which a local regulator would require you to set up your own entity. So it is no longer a you choose your own adventure. It is the regulator thinks that you are via an employee footprint undertaking an activity of such substance that you need to set up your own corporate infrastructure. We actually undertake kind of a review of permanent establishment or tax nexus risk as part of our onboarding process that is kind of based on any quantifiable value created by the employees in question. Why? Because the easiest way to draw an audit or draw scrutiny from a regulator is to have a big pot of money that could represent tax revenue for the local regulator. So that is one of the main triggers, but other triggers might include holding fixed assets, warehouse inventory, something like that in the space, needing a bank account or receiving funds in that jurisdiction, or kind of contracting directly. So, but that is one point where EOR kind of no longer is appropriate, and that should factor into your decision making when defining your strategy for global employment. The second one is employment law. It's not a limitation, but it needs to be recognized that EOR is not an alternative for local employment law compliance. What we often see is US clients, for example, expecting that the the employment regulatory system that they know in the US, so employment at will, for example, can be applied elsewhere, and that is definitively not the case. If you are using EOR to employ in France, for example, you are still subject to the highly restrictive termination requirements in France. I'm sure you guys have all heard of these horror stories of the unfireable French employee because of local regulations and protections. So know that EOR is a really handy HR ops light mechanism, but it is not an alternative to local employment compliance. And then finally, employer insurance requirements. So the reality is that an EOR will in most cases have general liability insurance for an employer, which covers kind of white collar knowledge work, etc. But some roles that might require higher insurance coverage, for example, construction, where accidents are just kind of more likely, might not be covered by that policy. So make sure you understand what the requirements are for any employee footprint that you are deploying. And then the final thing I'll say here is not just because it's a pet project of mine and I've been involved here since the start, is that not all EOR providers kind of are built equal when it comes to kind of this diligence around compliance. But at Remote People, we take this very, very seriously and we actually engage actively with regulators. GEO is the Global Employment Innovation Organization, is the government affairs or kind of public affairs industry organization for EOR, clubbing together many of the biggest players. And we're actually actively engaging with regulators to minimize some of the ambiguity around where the EOR industry sits and to kind of achieve direct recognition of our industry in the kind of business employment ecosystem of all the countries that we operate in. Obviously, governments move at a more than glacial pace. So this isn't something that's going to be solved tomorrow, but it does show you that we are really intentionally making sure that regulators understand our model and and therefore mitigate the risk of our clients using us because our model is understood. All right, let's move on to the next slide. So, 4 hidden risks that I'm going to regale you all with today for 2026. Some of these are kind of ongoing, and and Chris has actually mentioned, and you've probably heard of. And 3 and 4, the pay transparency and the emerging regulation for AI and HR, are relatively new. So I'm hoping to be able to kind of like share some best practice here that'll be kind of new to you. I'll start with kind of a really simple one that we can tick off and then move on fairly quickly, and that is around permanent establishments. I've already explained tax nexus and permanent establishment, but it is something that we keep seeing come up over and over again in the shape of companies that are, hiring contractors or using an EOR to hire employees without really a defined framework as to when they graduate to their own entity. And permanent establishment risk is real, and I have seen PE or tax nexus risks stop things like VC funding or private equity acquisition happening because under diligence prior to that transaction, a higher risk of permanent establishment in a given country is found and it stalls the transaction until that risk is mitigated. So it's something that should really factor into your corporate decision making when it comes to kind of managing your global workforces, particularly in those peripheral markets. The second one is misclassification. Chris already mentioned we are living with the effects of the gig economy, right? The rise of Deal, Uber, Deliveroo, etc. Means that a lot of employees are basically being classified as independent contractors, although they are working pretty much their entire working day for kind of an Uber or Deliveroo or kind of a Grubhub type organization. So big regulators across different regions are getting increasingly strict on making sure that these classifications are correct and are actually changing the burden of proof to prove that classification is correct onto the contract giver, the employer, if you will. And fines can actually now become pretty substantive around that. So if we move to the next slide, we provided some examples of these kind of risk factors. So on the left, you have the US, and this is pretty standard across all regulatory blocks, to be honest, will make you repay 100% of any taxes and contributions that would have been due a full-time employee, an FTE, if they find that a contractor has been misclassified as a contractor and should have been classified as an employee. So again, you have backwards facing liabilities that you'll need to resolve if a misclassification finding is found. Then to the middle here, that's the EU, the good old EU, which is positioning itself as a net exporter of social policy. And with the EU Platform Worker Directive, which came into force last year, is really starting to crack down on misclassification, including through fines, which can range from 20 to 100K. But we saw a huge amount of movement around these kind of contractor classification regulations, particularly by these platform companies whose business model kind of relies on that kind of light way of retaining talent when maybe they should have been a bit more diligent. And then on the right is just kind of a bit of a stat, which is kind of how long it usually takes for a misclassification finding to come to light, about 18 months, which means that if the company is found to have misclassified talent, you already have a year and a half worth of liability that you need to account for and probably pay fines and kind of like retrospectively contribute kind of funds to. So this isn't this isn't something that is kind of a little risk around there. These days, it is a huge risk, and it's often triggered, quite frankly, by employees themselves that contact regulators if they think that they are, not particularly well done by, or if they kind of just honestly use ChatGPT, etc., to kind of play lawyers for themselves. We are expecting quite a bit of an uptick in kind of audits around the kind of classifications. So make sure that you audit your contingent workforce on a regular basis to kind of mitigate that risk. All right, with that, we are going to go into our next poll. I would love to hear what your biggest barrier to international hiring is today. Let's see what the group thinks. All right, excited to see the answers. Okay, so compliance complexity is at the top of the list. I'm almost reassured to say that because what we often see is employees or clients that minimize that risk. And the reality is that there is no minimization of dealing with a patchwork of different employment regulatory systems that are dealt with in different languages with different kind of jurisprudential kind of history, etc. So that is good in my view. Cost concerns. That's fair as well. Obviously, the cost of dealing with compliance can be significant, although, as Chris mentioned, there are also cost benefits of hiring internationally, given the relative value of retaining talent in one market versus another. Finding the right employment is pretty low, so good. Glad to see the confidence there. And then onboarding and managing in remote people and internal buying kind of at equal 18% there. So I think that's a really interesting statistic because I do think that compliance complexity, the HR operational lift, and the internal buy-in are things that can largely be solved by kind of a lighter HR, global HR model like EOR. So as we move on, hopefully we can allay some of those fears. Moving on. All right. Buckle up. These are the new 2026 emerging global HR kind of considerations that I think people are going to increasingly have to deal with and that will have huge ramifications for any global HR compliance teams. One is pay transparency regulations. As I've already explained, the EU is positioning itself, or is quite often, a net exporter of social policy and has the kind of most stringent regulations when it comes to kind of emerging HR regulation. And the EU Pay Transparency Directive, which was adopted in 23 and will come into place in 26, is no different. Basically, what the intention of this directive is, and their equivalents in the US, which are kind of governed at state level, and they're hopefully the equivalents in the UK. The intention there is to minimize pay disparity between kind of men and women or kind of any other minority groups, basically. How are they going to do that? They're going to require the publication, not publicly, but to regulators of your pay grades, basically. So how you are paying different kind of employees with similar titles that are part of different kind of class. So you are going to have to, if you have employees, not if you're HQ'd, not only if you're HQ'd in Europe, for example, but if you're a US company that has employees in Europe, you're going to have to submit that to regulators on a kind of semi-regular basis, right? To prove that you have kind of an equitable pay structure. So this is a huge kind of additional lift that is going to take a lot of consideration by companies. And the US and the UK are very likely to be close behind in terms of requiring this. So if we move to the next slide, effectively, what we're going to need to do is to one, what the best practice are that law firms and ourselves and any other advisors in the HR space are recommending is that you need to pretty much sooner than rather than later audit your pay structures. What does that mean is we recognize, and it's kind of common knowledge, that very often pay structures are developed kind of organically, right? You have a company, someone just doing really well. It's a bit of an intangible benefit that they're drawing to the company. So you give them a pay bump, and that decision is taken unilaterally by their line manager or something like that. But if that happens over time, then quite quickly you have a really uncoordinated pay strategy across roles that should, on paper, look like they're commanding the same salary, but in reality, due to that organic context, are no longer. So one is audit your pay structure to understand where these outliers are. The second one is you need to build a robust job architecture and compensation architecture that differentiates between different roles and different salaries, right? You have to be able to explain why your director is being paid more than your manager, frankly. And if two directors have massively diverging pay, that is what these directives and these audits want to kind of like crack down on. So starting to kind of think about how you're going to rationalize this and what you would be comfortable sharing with a regulator in these audits is going to be homework for this year. Beyond that, I think making sure that we train managers, so HR managers, but also kind of general managers on these new considerations is going to be really important to avoid any slippage or any kind of issues with respect to pay transparency going forwards. And then finally, as is with everything, when life gives you lemons, make lemonade. We feel that pay transparency is actually a net benefit. A lot, and HR.com, I'm sure, have some stats on this as well. But a lot of kind of employee dissatisfaction comes from perceived unfairness, and kind of having transparent pay structure can actually be a benefit to kind of creating cohesion within your workforce. So this is, I think, a good prompt to kind of make sure that companies are fair and considered in how they distribute compensation across different roles. All right, moving on to the big one. AI is everywhere, right? I'm pretty sure, I mean, I certainly can't open my LinkedIn feed or my inbox without somebody trying to talk to me about AI and agents and this and that and the other. So and we as an organization are really keenly kind of focusing in specifically on AI's application in HR and the emerging regulations around it. Once again, the European Union is probably ahead of the curve with respect to kind of regulating this space. And as part of the AI Act, which they put into place in 26, or HR, so AI's use in HR is classified as high risk, meaning that audits are going to be required to kind of ensure that the usage of AI for HR use cases is not discriminatory or in any way. I'm going to go into the detail of kind of like where that comes out, but this table I think is a really kind of good overview to kind of see what the different regulatory systems are across three kind of political poles, and also kind of like double touch on kind of what the fines are. So the EU, as I said, is probably the most prescriptive. HR is high risk, so we're going to have to go deep on kind of compliance if you're using HR to kind of manage any European employees. The fines there can be up to 35 million or 7% of global turnover. So companies like kind of the big tech companies, etc., could have fines up to the kind of millions if they're found to systematically use AI in a way that is contrary to what the EU deems to be kind of discrimination, etc. The United States has at the federal level been pretty positive about AI's adoption. They want to be hands off and let AI companies kind of build and grow and go wild. So, clearly Elon and the rest have had an effect on the current administration. But that is not matched by what's happening at the state level, where kind of New York and California are actually taking pretty active roles in kind of defining AI's use in HR. And again, we can have kind of pretty high penalties with New York, for example, regulating that up to $1,500 a day for any individual kind of AI misapplication that is discriminatory being used by a company. And China is kind of its own beast. They have a slew of laws, but are not particularly prescriptive in terms of what exactly those fines and requirements are. They are effectively saying that any AI use that is contrary to social cohesion can be cracked down upon by by the powers that be there. So you can be effectively fined, kind of have your business licensure removed, be kicked out of kind of doing business in China. So really, there is no real definition of kind of exactly what the remedy is. But suffice it to say that regulators are absolutely kind of doubling down and kind of like taking close scrutiny on kind of how AI is used in HR. So let's move to the next slide. So to the extent that all of this is still emerging, these are some of the kind of best practice kind of considerations that we would recommend any HR team and HR and compliance teams should review in terms of their kind of AI use for the HR function. So one is around hiring and recruitment. So if you are looking at resumes, if you are using an AI assistant to kind of interview and kind of score interviews, etc., these are potentially high risk kind of areas for AI's use, and you should be undertaking audits on a kind of bi-regular basis and maintain an audit trail to kind of ensure that no discrimination is happening. So, for example, make sure that you understand if any of the candidates are in protected classes, whether you are seeing kind of certain classes be kind of favored by the system. These kind of audits are going to be crucial to kind of minimize your organization's risk. The other one is around performance management, so PIPs, etc. If you are using AI to track activity levels, again, this is a very high risk use of AI because we are talking about people's livelihoods, right? So making sure that we have taken appropriate steps via audits, via kind of maintaining a log that is kind of reviewed periodically to kind of minimize any risk of discrimination. All of these things are going to be very, very important going forward in this regulatory context. And the last one is with respect to workforce planning. That is the restructuring of workforces, the potential firing of large groups of people, etc. Those are obviously very high risk as well. And if you're using AI to kind of like make recommendations with regards to an organization's structures, make sure that those are only used as suggestions and that there's a human in the loop to make the last mile determination on hopefully a body of data that includes AI but is not exclusively AI, and record how these decisions are made, because these are kind of the key points at which the key intersections at which we predict employment suits are likely to rise quite significantly. All right, so we've said an awful lot, and this is kind of a global compliance checklist that kind of covers the whole gamut of what we've discussed today in kind of easy snippets. But we do think this is a really helpful thing to keep in mind when you're thinking about how do we kind of shore up our HR and HR compliance organization. So starting from the top, worker classification, permanent establishment tax nexus, local employment contracts and their compliance, statutory benefits and their compliance, termination, cross-border payroll and tax withholding requirements, data privacy, AI in hiring, pay transparency, and vendor and EOR contracts, so SOC 1 and 2, but also vendor and EOR compliance with things like AI HR and pay transparency are going to be should be high up there on the list and should be something that you're already kind of considering, if not something that you should kind of implement in your considerations when structuring compliant global HR operations. All right, moving on. Here's the big poll. Hopefully I didn't scare all of you. But would love to hear how many of you guys are already treating some of these subject matters in your current organization. All right, here we go. Wow. All right. So 60% are considering none of the above. If you are in that 60% and you do have kind of an international employee footprint, I do think it's probably worthwhile considering some of these points and kind of having a plan in place because regulators are going to regulate, and we do expect audits to kind of rise significantly around these subjects. Good to see 25% are already evaluating two or more, so are ahead of the curve here. And then a few in each of pay transparency and ANHR regulation. Now, pay transparency is probably further ahead in terms of maturity as a regulatory framework, so that's probably expected. Whereas AI regulation is very much still emerging, and we're kind of expecting the implementation across Europe to happen this year, effectively. So, lots of homework to be done for sure. Let's move on to kind of sum up some of kind of our take home kind of like pointers here for you. So one is when you're thinking about hiring in a new market, like these are the six key things that I think you should consider, we think you should consider and kind of take into account when you're making your decision on what market to go into and whether to go into a market. So one is the talent depth. What's the pipeline of talent in a given market that you could access? We're seeing a lot of use cases around this, particularly in the engineering world, but also in other worlds. A great example, I think, is a couple of years ago, the big law firm Kirkland Ellis was snapping up all year one and year two associates, leaving a dearth in the market of these kind of the engine room of the lawyers for big law firms. And we saw a lot of other firms tapping into the UK and Israeli market, where you had kind of a good amount of talent with kind of English language knowledge and a common law training basis to be able to backfill those roles. So these kind of opportunities to kind of get ahead of the curve and backfill are real across the world. But talent depth needs to be part of your analysis for that reason. Second one is total cost. So understand what that talent will cost. The likelihood, for example, for engineering roles, is that anything in Palo Alto is going to be extremely expensive when compared to equivalents in Latin America, kind of, or Eastern Europe, for example. The third one is compliance complexity. So what liabilities are you taking on by entering a new market? As we've discussed, permanent establishment kind of is kind of high among there, but also kind of other employment regulatory frameworks that might keep you locked into kind of an employment relationship should be considered. Infrastructure, what will you need on the ground to fulfill the activities that you want is going to be crucial. Again, that will be pretty central to deciding what hiring method or what mechanism you use to kind of enter into a new market. Strategic value. So what is the output of that international hire versus all of these other considerations, or the cost of these other considerations is obviously a BizOps decision or BizOps consideration that you should take into account. And finally, exit cost. This one is often overlooked, particularly in instances where clients are moving fast, they want to set up a company and then hire through it. They often then are shocked at the cost of kind of dissolution of an entity, because you have to again hire lawyers, accountants, etc., to make sure that all of your tax your tax submissions are kind of like resolved in a way that is compliant in that market, and it can often take a long time to resolve that as well. And then we move on to the penultimate slide. The total cost of employment. So we move forward. There you go. And that's just double clicking on the total cost of employment, because we do see a lot of countries just considering salary levels. And that honestly is just part of the story. The reality is that if you hire in France, for example, you're looking at often 50+% of employer tax on top of the salary, which could obviously reduce that gap in kind of like net salary pretty significantly when taken as a total HR operational cost. So generally, we like to define the total cost of employment as salary, what you're paying the employee on a gross basis, statutory, what the employment tax is on top of that, administrative cost. So this is when you're comparing EOR to kind of direct employment. What would be the cost to kind of like hire these employees and manage them? So local HR, local accounting, local legal. Cost of benefits. How expensive is it for me to procure any supplemental life insurance or health benefits if that is needed and part of the package I want to offer? And then risk. Kind of what's the risk factor of kind of using any of the strategies? But we do kind of exercises as a matter of course for our partners and for our direct clients all the time in modeling out the total cost across different markets to allow them to kind of undertake these analysis. So we'll provide data to clients and partners around talent depth, talent cost, and employment risk. And we think that that should be kind of par for the course for any company evaluating an international hire. Moving on to the next slide. So things to bring back to your team. Again, we love lists. Clearly, we've provided quite a few of them. But the 5 things that we hope we shed a bit of light on is 1, compliance cost and reduction are not mutually exclusive. We like to think of it as a potential benefit to your organization if you can get it right. 3 is choose the model per country per role. Make sure you're taking into account all of these considerations about talent cost, complexity, kind of business requirements on a case-by-case basis. It's not a one-size-fits-all. It's not the fact that you may have chosen EOR for France doesn't mean you're going to choose it for Baghdad. Then use the break-even rule. And we do think we're very, very strong on this point. We do recommend that EOR is considered as a matter of course when you are discussing hiring less than 25 employees, for example. Any EOR provider, including ourselves, that's worth their salt, would be happy to model out the cost and compliance for you. And then finally, build the 2026 compliance checklist into your annual rhythm. So be aware of what's coming round the corner. Whew, I'm done. Finished everything. I apologies for what felt like a massive monologue, but hopefully that wasn't too painful. Kathy, back over to you.
Thank you, Mark and Chris, for this very informative presentation today. Just a reminder to the audience to fill out a quick feedback survey that will open on a new tab on your screen. It only takes a few minutes, and your valuable input is key to improving the quality of our webcasts. To join the next session, which is starting in just a few minutes, click on over to the hr.com event auditorium. We hope to see you there and enjoy the rest of the event.